Let's do a little crystal ball gazing, if you will, given the conversations and time you spend, I would say, normally in the corner office or in boardrooms, but now you do it on Zoom or virtually, about what you're seeing 2021 might look like. And let's start with just, I mean, you live in the deal space, how you think CEOs are thinking about the world and what the level of confidence is one way or the other.
Well, thanks for having me, Andrew, and I hope you and your family and everyone on the Squawk Box team are doing well and finishing the year healthy and strong, and looking forward to what we call hopefully an extraordinary year ahead, because we have been living in a very big crisis moment, and we still are, but hopefully that we are going to look forward into brighter days ahead post-vaccine. Well, CEOs are certainly feeling cautious about families and health and everything that we always talked about, but they are feeling more optimistic about the deal environment. We've seen a remarkable pickup in the fourth quarter. In fact, I think going into 2021, this is our strongest pipeline at LionTree that we've had in terms of the deal environment. That's not the be-all, end-all for things that we should all be concerned about, but from a deal perspective, all the fundamentals are positive. The market is wide open, as you can see every day. It seems to be green. There is a wave of IPOs, and the SPACs are all out there looking for deals and transactions. There are probably 200 today, all hunting for deals. Companies are looking for portfolio optimization. Even the large conglomerates are starting to sell off pieces of businesses, and there's openings for divisions to go public, not just the growth companies that want to go public for the first time, but divisions of existing companies are going to start to go public or separate in different transactions. We did one with, obviously, Viacom CBS selling the Simon & Schuster business just a few weeks ago. And so they're all different types of transactions. And then also the interest rate environment is low, private equity activity is increasing, and I think all the market fundamentals are strong. So I think when you also look at elements of technology and growth, whether it's tourism and travel, and events, and some of the value-driven plays are starting to come back as well.
So, the thing we talk about almost every day these days is SPACs and how SPACs are changing the dynamic. You talked about divisions being spun off, and one of the questions I've been looking to see is whether you think that there's going to be a number of SPACs effectively buying divisions of publicly traded companies. It's a harder thing to pull off from what I understand, in part because you have to get audited financials for that division. Effectively, you have to bring investors who would have invested in a PIPE, for example, over the wall, which means then they get sort of iced out about in terms of being able to invest or not in that company for, in some cases, an extended period of time. How do you see that all playing itself out?
Well, it's interesting. The tail wagging the dog concept is happening a lot. So I had a few meetings yesterday with CEOs where they were called from people in the press or from SPACs, basically pushing transactions or speculation about transactions just by virtue of the fact that there are so many SPACs out there pushing deals. Doesn't mean the deals are going to happen or that the deals should happen, but there's so much more conversation happening because everything seemingly is possible, and there's just a lot more chatter about the pitch. So I think a lot of this is the pitch still. What should happen is really based on what the boardroom and the companies and the CEOs' objectives have to match up to. But there are certain dynamics where you will see divisions of companies unlocking the value of the holding company by being separated. That maybe takes a more risky division that is more of a growth, has a growth orientation into a public dynamic, and leaves the existing company to sort of like uncap its overhang. I think you're going to see some of those things. You can do it by separating the financials. It just takes a little bit more time. But I think the evolution of SPACs is going to get kind of interesting. I mean, you could even see individuals go public in SPACs, or athletes go public through SPACs, or celebrities go public through SPACs. Anything with a cash flow stream, you could go public through SPACs. We have a concept that we're talking about is it's not just media, it's me-dia. So it's the individual channel. Everyone has their own streaming platform that could extend all the way to public markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.